in XM Live Education. My name is Giancarlo Prisco, and today we have a special session like every Thursday, the technical versus fundamental session. And also, I have the big pleasure to share this moment with Junet that immediately say, hello, Junet, how are you? How was everything?
Hello, hello. Good morning, Giancarlo. Great to see you again. It is interesting week we are in. Everything is good. I am, as we said, technical versus fundamental session preparing. Since this morning, I am analyzing deep fundamentals, checking the changes. But unfortunately, I cannot update with some of the data that I like to update usually on Thursday because US market will open in a couple of hours from now. So I'm going to get new data in a couple of hours from now. I don't have session. Then I will invite all of our viewers to discuss again next week, maybe even tomorrow. And yeah, everything is very interesting. But before we start talk about the markets, I would like to say also big hello and happy Thursday. And how are you to ask you?
Okay, good. Here I am in Madrid. This is a period that I travel a lot, so I'm a little tired, but it's okay. And of course, I would like also to say to give a big welcome to all our friends from YouTube that stay here with us this morning. Thank you very much, guys, to follow us. So I'm to be honest, Janet, today we have a lot of interesting movement. I expect a very interesting movement in the market. Uh, Probably, as you know, today we have also the Powell speech in the Senate. Yesterday, it was something, it was interesting to listen some expression from the mouth of the president of Federal Reserve. He said that practically that the Fed will continue to do this interest rate hike until inflation not at 2%. Even he has to ralentize the macroeconomic cycle and have an impact of job market. So, guys, this is the. I think that Powell, in this case, maybe he try to give some fear in the market, but essentially there are a problem that a lot of analysts and traders forgot. And this is something that I would like to discuss with you. Let me say also hello to all the trader in the chat, Samantha, Elsa, Mambua. Good morning, guys. Good afternoon, depending where you are. Thank you very much to stay here with us. If you have any question, please don't stop yourself and leave your question in any moment. Uh, the pause of Federal Reserve did not come exactly in the moment the agreement for debt ceiling arrived. This is very important to mention, guys, because the USA government, through the Treasury, need immediately a lot of money to sustain their activity. The quantity that I expect this month is just around, could arrive around $500 billion, but the real money that they have to produce through the bond is around $1.3 trillion. The effect of this switch could be stronger, and we can have an effect also in stock market, so indexes could drop. The problem is that probably what Powell said yesterday, he mentioned that he do interest rate hike, but a lot of analysts forgot to say that Treasury need this money desperately. So if Powell continue the quantitative tightening, Treasury has no way to take money or from economy or worse from the stock exchange. So to avoid this catastrophic event, because could be catastrophic, the more simple way is to stop the interest rate hike. Why? Because you have to remember, guys, that Powell with quantitative tightening eliminate $95 billion per month of bond. So you can imagine that if he can contain while the treasury bond come in the market, he eliminate liquidity. So there are no way to think in this moment that Powell could do a new interest hike. I expect that he not cut this year, but not do another interest rate hike. Why? Because treasury need the money. So a market understand this point. And of course, it's difficult to see a drop on market. A strong retracement is possible between August and September, but not like a reversal of market. We need a very strong reversal. Now we discuss better about this, but this is something that you have to remember from a fundamental point of view. Powell could say everything, but the reality is that he cannot do nothing for now because Treasury need to emit these monies. So even uh, we can say also another point at favor of this view is that when we have the bank crisis, immediately Federal Reserve input the money in the market for all for the bank. So I'm not believe to this yeah, at least for now, I'm not so. I think this is just a mention to maintain the market a little intention, but essentially, I'm not believe that I will do another 25 basis point because could create a complicated situation. I can be wrong, of course, guys, but it's for me, it's a most logic way to see the situation that Powell do. So now I would like to ask to Juliet, if you have the same view or you are agree, not agree, which is your idea of this situation?
I think we have discussed it last week, Giancarlo. I will add something because
Yes,
I
no, we
like,
discuss, but with debt ceiling, we
yeah,
don't see from this point of view, just to see to see what do you think about that.
okay. We have a couple of important things. We touched couple of, which we discussed also a couple of times already, but let's update and let's share a little bit more information since last week and since yesterday. Um, it's all starting with debt ceiling and debt ceiling, it's limiting government to create debt, but many people may not be familiar with what kind of debt and how much is that. It's not allowing government to create more debt than they have to pay, which is not exactly not creating debt at all. Anyways, this is not so important for the topic, but in order to be able to do something, let's say shortly closing the gap of this situation, Treasury Department had to release money from their account, which account was full of 700 billion of dollars, then slightly shrunk down to 500, and then slightly shrunk down below 100 billion of dollars. That boosted high liquidity in the stock market, in the financial system. That's why that was the only reason stock market was strong so far. We've discussed that multiple times back in a couple of months. I've seen a lot of different traders thinking that news and market wants to buy the stocks and news are doing this, news are doing that. But actually, I try to explain many times that stocks are going up because there is money to buy them. Nothing else, no news, no NFP, no CPI, nothing else actually can create this bullish trend. NFP, it's nothing to do with the stock market. NFP, it's nothing to do with buying power in the stock market. Emotions are short term in the market. The real trends are being created with a lot of money, billions and trillions of money.
Yes.
That's why the fresh liquidity that comes from somewhere is buying this stock market. And that fresh liquidity came from Treasury Department, from their Treasury General account. Janet Yellen was warning about that many times that they will run out of cash. That's why debt ceiling must be solved. And they solved it. We've discussed that. Then if they solve it, so they go no default, then they have to fill back this Treasury General account. You said that if the Treasury General account starts filling back, then there will be some problems with Fed. Let me actually clarify a little bit more the things that I believe. Treasury General account will be filled back, and it's already started. Tomorrow I will update the data, but let me tell you that until end of June, we have 8 days, 9 days, something like this. They will fill the Treasury General account by $425 billion. And after that, they will continue filling the Treasury General account by another $200 billion of dollars until September. So until end of June, we're going to have $425 billion filled in the Treasury General account. And until September, that number will go above $600 billion. So with that being said, this is bearish for the liquidity, equals bearish for the market, because we were waiting for Fed decision, and Fed said that they will continue with quantitative tightening, bad for liquidity. Treasury general account will fall up, bad for liquidity. Bad liquidity means there's no money to buy the stock market, and those hype among traders, beginner traders, not very familiar with the fundamental situation traders, medias are going to really uh, will drag down this bullish hype. I think it was a bubble short term because of that liquidity. And I don't believe in bullish trend of the stock market long term from now, like meaning it's not start because there are a lot of media saying this is new bullish trend. We are officially
Yes.
in the bullish trend. This is really big hype that will create a lot of headaches to many people. Well, let me tell you something else, Giancarlo, which is also very, very important for the second topic that you mentioned. And this is if Federal Reserve will be able to increase interest rates while the liquidity is going down. This is very important thing because there are something maybe that is missing here. If Fed increases interest rates furthermore with that bat of the liquidity in the system, that's going to create a lot of problems, right? It's going to be big drama. But there
Yeah.
is one market that is of Fed market that is there to control everything. This is called repurchasing agreements, repo market, and reverse repo market.
Yeah.
In this intrabanking market, we have over $2.4 trillion of money, not billions. Let me repeat it. $2.4 trillion money that since July last year, I was talking about this reverse repo money that I am looking at this chart because this is going to be huge for Fed. And Fed was waiting the right time to increase interest rates to the level that it's already dangerous. And the moment when liquidity crunch starts, Federal Reserve will start use this reverse repo money. Meaning, in one hand, they will continue to tighten monetary policy, but because that's a big problem for the liquidity, with the second hand, they have $2.4 trillion in the reverse repo market, which they will boost the liquidity and they will bail out their own drama. So with one hand, they will say, we are confident, inflation must go down, we will be increase interest rates, we won't step back. With other hand, they will boost liquidity in the financial system from the reverse repo market. That's why I believe that Fed can increase interest rates furthermore because they have additional money, huge amount of money. It's not a couple of $billion, it's over $2 trillion, which already they started using. And this is not going to add, this is not quantitative easing because this money was existed before. It was saved in the reverse repo market. And right now they will just use it again. So it's not printing new money. It's not going to add more for the money supply. Money supply is shrinking, and they will use it very tactically to control the liquidity. And if some drama starts from this money, Treasury Department actually may fill back their Treasury General account, which actually may not have significant hit to the liquidity in the financial system. So the bearish market I'm still expecting, but not from the first scenario, which is both Federal Reserve down and Treasury General account up. Very bad for the liquidity because they will use reverse repo market money. I think it's going to be softer drop. So
Yeah.
that's why
Okay, I understand.
yeah,
No,
I
this
think,
is yes, about the management of a bond. Yes, this is the way they manage
yes,
the liquidity. No, this is just because I have to see if Powell really acted this. I have summed up, but essentially what you say, it's super correct. Uh, I would like also. I'm agree about the fact that this bullish market is also a little forced by retail traders, and I'm agree that I expect some important retracement, not immediately, you know, but something that need time. I expect that this market is slow in the middle of the year until September. I expect this small bearish market, but not change the general trend that remains super bullish. I would like that you know what happened here with the retail traders that continue to buy strongly the ATF and create this pressure, guys. This is important from fundamental point of view, but also from technical, because what are these? I can confirm that retail in this moment force the purchase. They buy Tesla, Nvidia, Apple, and of course the funds in this moment are maintain this short position on this stock, for example. And in this sense, we are assisting also what mentioned Junet, we are assisting a bubble.